Welcome, everyone. My name is Wayne Smith. This is 4D Finance, and this is our Dividend Watch part of our program. Our programming will have different things, but this particular one is near and dear to me because I'm a dividend income investor. And I'm looking at a particular stock. Now, I want to warn you, and here's my disclaimer, I am not a financial advisor. So anything that you hear come out of my mouth, it's not financial advice at all. I will tell you though, as far as further disclaimers, whether I'm in a stock or not, I am not in this particular one I'm going to discuss, but I'm really thinking about it. It looks very good, it looks solid to me. But again, I'm not a financial advisor and this is not financial advice. So when I did some analysis, I saw one particular stock come up on my, in my purview, so to speak. And it's got a strange name for what it is. It's a real estate investment trust. But the thing about its name is it's called the Necessary Retail REIT Incorporated. The Necessary Retail REIT Incorporated. Some of the things that it invests in is freestanding single tenant properties. They're leased to investment grade tenants, so to speak. So it's commercial. It's a commercial grade, investment grade, and also multi-tenant retail properties, mostly like power centers and things like that, and lifestyle centers. So they're in a pretty stable part of the economy. If these power centers and these lifestyle centers are doing well, then they probably sign 10, 15, 20-year leases. And so they're going to be there for a while. And it's almost like if they have any triple net, and that's a term you might have to look up, triple net, but basically it's kind of like a hands-off deal. The investment company, this particular REIT, doesn't have to do much. The tenant says, don't worry about it, I'll take care of everything. And so triple net is wonderful, especially if you're in the commercial real estate investment arena. So RTL, Richard, Tom, Larry. RTL, dividend history and description, has it listed, and its stock name is the Necessary Retail REIT. We know that real estate investment trusts, or REITs, can really give you some great returns. And this particular one gets its returns from something called funds from operations. I don't want to bore you with a lot of data and calculations and things of that nature, but basically it's what goes in, what comes out, and the net result is how much it makes from its operations. Not necessarily sales of its properties in its portfolio per se, but what does it make when it's actually doing business? So the rent's coming in and things like that, things they got to pay out, and how much is it making off its operations? And this particular one does very well. So for some of the specifics about it though, I think, and let me double check. Yeah, it closed today, which is the 10th of March, at $6.38. So it's very moderately priced if you want to add it to your portfolio. Now, another thing to look at is its yield. Its dividend yield is around 13.32, and it pays its dividend quarterly. That's every 3 months, quarterly. 13.32 is the percentage of yield, and the stock costs $6.38. Now, some things to do when you do your research on dividend stock. I like to find out how many ETFs are holding the dividend stock that I'm going to purchase. And that's what I looked at for this. In my research, I saw that 16 different ETFs had this stock in its portfolio. To me, that's a good sign. It's also a good sign in what they're investing in. And I went to finance.yahoo.com and I saw some other things that I liked about this particular stock. It even has a 1-year target estimate of $10.50, and that's what some analysts think it'll go to. The short term and midterm, that's anywhere from 2 weeks all the way to 9 months. That particular outlook is up. It's presently somewhat overvalued by some analysts, but then again, it's a REIT, and they're weighted by their funds from operations. And also look at the climate, the perception, the consumer confidence index. Those are some things you want to weigh in as you start to approach the purchase time for a stock like this. So you're going to watch it for a while, get it when it's low, of course, right? The Warren Buffett strategy, it's just common sense, really. It's not just his strategy, it's everybody's strategy. It should be buy low. And if you have to sell, especially with dividend stock, sell very high. Now, this particular company is based in New York. It's got some great numbers, and I will post some of these numbers to show you how the funds from operations has been growing over the last 4 or 5 years, and how it's been paying out, especially on its dividend. The dividend, a lot of people say stay away from anything over 50% payout ratio. Well, because it's a REIT, they get a break on their taxes by passing on profits to you as the investor. It's not because they like you as a stockholder. It is because they get tax breaks. And so they get money, they loan money out, they buy property with money that is leveraged or on loan. And so they can get tax breaks for it, for this particular operation. They have to pay out at least 90% of their earnings, and they have to pay them out in dividends. Why not grab them? Then it also will have this little bit of appreciation, right? The price target, it's at $6.38 now. The price target is around $10.50. So you get some growth there. Those are some things to think about. So I'll post this up. You'll see more from me about dividends in the 4D Finance Dividend Watch section. I'll be handling most of those, and this is something that I enjoy doing. So I want to thank you for your time, and keep on watching. Our next video will probably be on another REIT and maybe some shipping companies that are coming up. I'll just whet your appetite for that. Take care. Have a great day.